not to the extent that they did get dropped, but at least some better response over there coming in from PFC and RAC. But there are many more stocks that are reacting today, isn't it, Niraj?
You bet. Let's take that action forward with our guests while we talk about those stocks specifically, but get in the initial comments from our guests. Jay Bala of Cash the Chaos on the technicals, Vijay Chopra, MD and CEO, Enoch Ventures on the fundamentals. And because we have a couple of conversations, including Bharat Forge lined up, we might not get as much time with these gentlemen today throughout the show, but let's get started at least. Jay, how are you trading any of the key indices today, if you are, the Nifty or the Bank Nifty as the case may be? And are there specific stocks that you're recommending at the outset on the show?
That's right. I'm looking for Nifty to bounce back from the lows of today, somewhere close to mid 22,400s to somewhere about 22,500. And then I'm looking to short. So, if from you're playing intraday, there is potential to go long with today's low as stop for a price objective close to 22,400. When it comes to the banking index, I'm doing nothing, but I would just say the banking index has clocked a lower top, and that's a slight negative for the overall banking index. There's no breakdown yet, neither in the Nifty nor in the banking index. When it comes to specific names, since I'm negative on the banking space, I have two short calls on the banking sector from the banking sector. The first is the PSU name, Bank of Baroda. It's been the weakest within the PSU space. I think it's clocking a double top around 280. So a stop about 285 for a price objective of 225. And from the private banking space, I have a short call on RBL Bank. This is an underperformer. I would have liked the stock to have come up in the recent bounce to somewhere close to 280, but still the stock yesterday started to crack. So I believe the stock is in a hurry to break down. So I'm placing a stop about 273 for a price objective close to 210.
Okay. So Jay Bala is negative or positive markets, but negative banking stocks. That's to be borne in mind. Okay, Jay, thanks for that outlook. Let's get in Vijay Chopra on the fundamentals. He's MD CEO Enoch Ventures. Vijay, thanks for taking the time out at the outset. Just because, as Tamanna said, it's actually all about results today on most of the major movers. Let's start off with the principal ones and try and understand what you think about some of those. Bharat Forge, you'd have seen the results, the commentary, margin expansion, some confidence about FY25. What's the sense here, Vijay?
Well, I think it is giving a very good sense on what the future looks like in the very short to medium term. One that we have seen that what kind of rally has happened in the auto and the auto ancillary space. So most of the biggies have done very well, and Bharat Forge, being in the auto and the allied space, has done equally well. So I'm very happy with the kind of margin expansion because margins were getting squeezed earlier. So companies which make more profits definitely give more dividends. And of course, the price rise increases, and this is good for the investors. So I think that, Bharat Forge, although it is quite up today, but it can, head its journey towards 1400 as well. So Bharat Forge, I'm pretty happy with the results.
Okay, so that's the verdict on Bharat Forge. And Jay, just wondering what happens here for stocks like these, which have, if you look at the last 6 months, they've had a very precipitous fall as well, post results. And today they have this meteoric, for lack of a better word, meteoric rise too. How do the charts look here?
Are we talking about Bharat Forge?
Yes, please.
Yes, thing is, from the 2024 low, this looks like it's approaching a significant resistance, but it might still have a little more upside to work with, somewhere close to 1480. Today's move is, as you rightly pointed out, it's just vertical. So that's telling the momentum is still strongly with the stock, but I'm more keen about what happens in the next couple of sessions. And when I spoke about Nifty, I was talking about very short term. I just want to add one small point on Nifty there. Basically, the Nifty has come out of a cup and handle pattern on the weekly time frame. So a close about 16.6 yesterday signaled that the volatility is likely to increase. So when I said, I'm going long on the Nifty for intraday, and I'm expecting a bigger decline to come from somewhere close to 22,400. So we need to be very cautious and keep the bullishness just for the extreme short term, not for the higher time frame.
All right, so that's the story as far as the markets go, and just look at the India VIX that we're talking about right now and how that mood has changed in a sense of what we've seen over the last several sessions. Of course, still up, but definitely not as dramatically as this morning. Now, PSUs in focus for a variety of reasons. One of them, of course, the reason that Niraj also mentioned, in the middle of this political heat and dust in election season, there has been a war of words in a sense between the Congress and the government right now about the management of PSU companies. And I'm just setting that context because, if you're wondering what's happened with the PSE pack today. Now, Finance Minister Nirmala Sitharaman, in a series of tweets, outlined what the performance has been of public sector companies under the Modi government. She's also referred to the market cap of some of these companies, how they've become very valuable, etc. And perhaps that's the sort of push that you're seeing, or that optimism that you're seeing reflected in some of those stocks today. But on top of that list is REC, back up on perhaps a whole other set of reasons. It's up over the day, even as the management in a conference call has explained to what extent a probably new set of guidelines by the RBI would impact them if they were to come into play. This is, remember, the guidelines for increasing provisions on project finances. Harsh is joining us now to explain what the management has said that has eased pressure. Is it also because of a thought that maybe these guidelines will not come to the fore as they are right now? They will be reviewed by the Finance Ministry. What's happening there with REC?
Yes, absolutely. First off, Tamanna, on the three key pieces with regard to impact, profits will not get impacted because they follow Ind AS, is what the management has clarified, nor will the net worths of the companies be impacted, and therefore the book value of the companies will not be impacted. Companies they looked at was, of course, they were talking about REC, but PFC as a consequence will also have a very similar impact in that sense. So that's the one key takeaway, probably why stocks are buzzing. Second off is with regard to what the impact actually will be. It will be on their tier 1 capital ratios. That will, of course, impact capital adequacy and therefore likely impact growth. So the extent of it, before I come to the growth piece, what the management suggested was that 40% of the current book is largely guaranteed by the state government and therefore would be excluded from the norms. Where is this coming from? It's not coming from the norms themselves, but from the management's interactions with the RBI prior to these draft norms being introduced itself. So what they're suggesting is that they've interacted with the RBI earlier, and their impression is that it will not impact bonds and loans which they've given out on the basis of which a state government guarantee exists, which is 40% of their current loan book. Clearly that will not get impacted, and then there are another set of loans which will not get impacted for various other reasons, maybe a central government guarantee or the like, and therefore they believe that only 20% of their loan book will get impacted by these norms, and that impact will only go on their capital adequacy, only on their tier 1 capital ratio, and therefore they believe that largely everything else will remain insulated, and they believe that their current ratio is very, very well poised for them to grow their balance sheet in an unaffected manner. The target they've given for FY30 is the balance sheet will grow from 5 lakh crore to 10 lakh crore. They believe that that will continue as is, not get impacted at all. So that's the other piece. With regard to the last little bit, with regard to profitability, margins they believe will improve by 10 to 15 basis points in the near term. They're bringing their cost of funds down, and therefore margins and profitability should improve. But largely this was the chunk which I believe is the key behind the move today.
Big move for REC, and we'll dismantle these growth numbers that they're talking about tomorrow a bit at some point of time. We'll go number by number, year by year, and try and get the valuation piece going. But strong move by REC and PFC today, not necessarily only because of the con call, but even otherwise. Now, before we take that break, quick word on Hero MotoCorp numbers as well. The numbers largely seem to be in line with estimates. Margins 14.3 versus 14.1. Revenue numbers, if at all, a few crores lower on that high base, and profit numbers also look okay. So don't think that the numbers look materially different from what was estimated. An 18% growth in net profit is something that market would accept or rather like, I presume, and which is why the stock too steady at about 1.5% uptick. We need to take a break on that note. Quick break. Be back with more conversations on auto ancillary like Bharat Forge, and of course continue talking to our guests Vijay Chopra and Jay Bala.
Welcome back. You're watching India Market Close. Focus now on the consumption space, and FMCG stocks have been showing signs of life after quite a while in the market. And I'm not just talking about Britannia and Americo. Across the pack, there is some positivity because of commentary from the management while their Q4 numbers have been presented. Now, what is also bolstering this is the recent report by Nielsen IQ for the first quarter calendar year, so the March quarter for Jan, Feb, March. Roosevelt D'Souza joining us now for more on that report. Mr. D'Souza, thank you so much for speaking with us here at NDTV Profit. Great to have you on. Now, what is interesting and perhaps heartening for the industry from your report is that it shows an uptick in rural demand after about 15 months. Can you elaborate on what exactly has been seen and how substantial this is?
Firstly, thank you for having me on this show. I won't say it's like a turnaround that is happening in the industry. What we're actually observing is there is an uptick, definitely, yes. If you look at the quarter-on-quarter kind of trends, that turnaround is what we are experiencing. But if I look at this quarter over the same quarter last year, that is the Jan, Feb, March in 22, there is also a base effect because there the volumes were very, very low. So one is the base effect, which is why we see that rural looks a lot higher than the urban markets at this point in time. But on a like-to-like basis, if you actually look at urban, actually on that base is really growing. Having said that, over the last 5 quarters, we've seen this constant uptick, which is happening in rural, which is very interesting and something that we definitely need to watch out for the rest of the next 3 quarters coming ahead of us.
Go back to that last line. So for the last 5 quarters, you've seen a constant upward move in rural spends. Am I understanding that correctly?
That's right. That's what's happening. Unlike what we saw, let's say, in the urban markets over the last 2 quarters, we're seeing a slight amount of slippage. But in the rural, there is a consistent move up.
Now, even within this, if I'm not mistaken, you're seeing greater growth in non-food categories, in your health, personal care, etc., isn't it?
That's right. And that is actually driving the overall, if you look at the consumption that is happening in FMCG, it is actually driven by the non-food. And non-food is 1/3 of the total FMCG. So even if you see the growth happening in non-food, the overall impact on the FMCG industry will still take some time to see that, that single-digit growth that we are seeing on the overall FMCG. Having said that, it is very heartening to see. I mean, this recovery was required. And even in food, it is the staples that is actually pulling it down. If you look at impulse and some of the other categories, they are still growing. And it's staples that is actually pulling it down. In what we are observing in home and personal care, it's across. Whether it's the essential home care or the essential personal care, they're all healthy double-digit growths.
I want to understand if you're seeing a premiumization trend at all. This is a big sort of conversation point in the consumption space, Mr. D'Souza. Are you seeing signs of that in health, personal care? I'm guessing not so much in food. And is there any rural-urban split there?
Well, I would. Premiumization is a topic by itself, and everybody's interested to know more and more about it. I would say premiumization is not really driven whether it's home care or personal care or even food for that matter. I think within these meta baskets, you'll also find there is some level of innovation that is happening and premiumization that is coming in. So even in foods, for example, what we are observing in chocolate, salty snacks, coffee, there is a level of premiumization we've seen, albeit on a small base on food. We are seeing that there's almost like a 5x uptick on premiumization that is happening. And if I take a step back and look at overall in home and personal care, it is the value that is being driven up almost by 1.5 times of what we are seeing in food. So it's happening in pockets. It is happening in categories which are high impact, high touch categories where consumers are all gravitating towards. And that's where you'll see some amount of polarization. There are still the basic and the low price tiers that are doing well with lower unit packs. And then as you go up on the price continuum, you're seeing within the same categories, brands are also coming out with more premium products, which have got a good consumer offtake.
Just one point on volume growth. Now, when we're looking at all the listed large companies and what from their commentary is really enthusing the market, the current theme or the consistent theme is that they're expecting volume growth to improve in the coming financial year. Are you seeing signs of that, Mr. D'Souza?
Well, I will say that there is volume growth that is happening, and it is still. So what is actually driving the overall FMCG growth is the consumption. And while we see that in foods, it is the volume is driven by smaller packs. Right? In non-foods, it is the large packs that is driving it. So there is a volume play, which is why we keep calling out in the NIQ reports that it's all a consumption-driven market. It's not a price-driven market.
Just one last question from you, Mr. D'Souza, is on the sustainability of what we're seeing in the rural segment. Since you're saying from the last 5 quarters, you're seeing a consistent uptick. Nevertheless, rural consumption has been a concern from a while. Do you see this sustaining and growing as a trend?
Well, my personal opinion, I think with kind of investments that the government is doing, whether it's the MREGA or the macroeconomic factors, and you can see some of those investments going out now and into the near future, that will be an interesting space for us to see. We also recognize that if you don't win in rural, okay, it's very difficult for us to win overall in FMCG. So, and a lot of our clients and companies, that's where the focus is. With the kind of positive investments that we are seeing playing out in rural, that's something for us to watch and expect to see some further plays that are happening in rural markets.
All right. Thank you so much for joining us. Nielsen IQ there, Roosevelt D'Souza talking about their latest numbers that they have put out for the first 3 months of this calendar year, which definitely has seen an uptick in rural spends for the quarter. All right, let's get back to what is moving the market right now. And I just want to pull up Hero Moto. I want to pull up Westlife. Both have seen numbers come out in the last few minutes. One positive and one negative, I would say. Hero Moto, just look at that spike over there. The numbers definitely seeing a clear uptick, up about 3%. On the other end of the spectrum is Westlife. And we'll just run those numbers for you on the screen once again. And there, that downtick coming in, down about 2.5%, dropping fairly quickly. Let me quickly take a take from Vijay Chopra on both of these. Yes, Vijay. Can you hear me, Vijay? You're on mute, I believe.
Yeah, extremely sorry.
No problem, no problem.
Yeah, so as I mentioned earlier about Bharat Forge, that the auto sector and the auto ancillary sector has been doing good. Now, on the same lines, Hero MotoCorp has also performed. The numbers are very much in line with the market expectations, and the stock is showing spike. Now, generally, what we saw, earlier, that post-monsoon there was an uptick in this in the two-wheeler sales and the entry-level car space. But again, this quarter, if they have posted well, I'm sure that in the coming quarter, generally April to June is not that great. It's a tepid quarter, but again, the next quarter is really good, post monsoons. So I wish all the best to Hero MotoCorp. I think the writing is clear on the wall. The stock is up, and definitely going towards 5,000. So I'm very happy with the results as of now. Auto sector, so to say, has been doing really well, and I think that a couple of next quarters are going to be good as well.
Two-wheeler sort of list. Hero, TVS, Bajaj. What's the ranking, Vijay? Sir, you're on mute again.
Starting with Bajaj Auto, that would be my first choice, and then followed by Hero and TVS.
Okay, so Bajaj, Hero, TVS. Good commentary coming in from the Hero MotoCorp CEO. Says he sees multiple tailwinds for the sector over the coming years. Macroeconomic factors will aid industry growth. The Zoom 125cc and Zoom 160cc launches in the first half will boost scooter portfolio as well. Multiple tailwinds for the sector over the coming quarters. Jay, quick call on a Hero Moto.
Yeah, I've been bullish on all three names since September of last year. And Heroes, I agree with Vijay, it's still got higher highs to come through. The 4,900 odds high it saw and the corrective pullback from there on is looking like a positive price action. Probably a final higher high to come through, but I don't think that's the case for TVS Motors. So, and caution in Bajaj Auto, although it doesn't seem like it's topped out, but the momentum for the stock has dropped precipitously. So if the stock were to drop below 8,100, I would think a major top has been registered for Bajaj Auto. So positive on Hero, neutral on Bajaj, and slightly negative on TVS.
So Hero, Bajaj and TVS is your order of preference. Just a quick take on Westlife. Net profit is 96% down. That's what's really hurting the stock right now. Margins have gone down 261 pips. EBITDA also down 15%. It's not looking good for a Westlife right now. We'll come back and get take from our guests on Westlife and other stocks as well. But on the other side, we're joined by Bharat Forge's Amit Kalyani. We're talking about the blockbuster numbers from the company. It's the stock in focus this afternoon. All of that on the other side.
%12 higher for Bharat Forge after the numbers and the commentary. It was circa 9th February 2024 when they sounded the bugle of caution for the world economy, and the stock had come off. It's recovered all of that and how, and the commentary about how they've ended is pretty strong as well, as are the results. Amit Kalyani, Vice Chairman and Joint MD of Bharat Forge, joins in right now to talk about what went behind the quarter and the year and the outlook at. Amit, great having you. Thanks for taking the time out. Good afternoon.
Hi Niraj, good afternoon.
So Amit, at the end of quarter 3, I remember you telling us that you will still do well in quarter 4, the quarters ahead, because of how the world economy is behaving, are sketchy. Now, love to understand what went in Q4 first, because you've shown significant margin improvement, defense orders, so on and so forth. And what are the takeaways from that, therefore, for the year for FY25?
So first off, maybe I should say that perhaps we were being a little more cautious than we should have, because that was when the Red Sea crisis was really precipitating, and we didn't know which way that would go. Thank God things have turned out far better for the global economy. Few of the things that have really worked for us is, we've had a strong performance on our standalone basis. We've had an extremely strong performance in our defense business, where this business is starting to take off. Our industrial castings business has grown 2 years at 30% CAGR, and we expect this to continue growing. And as we've said, in less than 4 years, we should double this or more than double this business. Defense also is doing very well. We have a large order book that we have secured, something to the tune of 5,200 crores. This is both for existing business, existing products, new products, existing customers, new customers, and this is all majorly exports to be completed in the next 3 to 4 years, some in 3, some in 4. So that gives us a steady business, and this does not include the Indian orders of products such as ATAGs, etc., that are yet to fructify, which should happen shortly after the elections. Additionally, on the industrial sectors also, we've made a breakthrough into new sunrise sectors, and we believe both these sectors are very promising. They are very technologically intensive and very differentiated, and these should give us good growth opportunities. Our aerospace business is starting to really show growth opportunity, really show growth, and we expect that in the next 2 years, this will also double, and at very good profit numbers. And lastly, our overseas subsidiaries, which we have been putting a lot of focus on. In fact, we have a board member, executive director, who's really owning that responsibility and really putting in the hard work to make that happen. And I'm happy to say that the results are showing, and that the European business will be profitable for the full year, the aluminum business for 25, and the US business will be profitable in Q4 for sure, both at a EBITDA and a PBT level. And same thing with Europe. The European business will be profitable for the full year. We are turning the corner, and this business is both growing in size and increasing in EBITDA margins as well. And on a consolidated overseas business, we will have a double-digit EBITDA margin in 25s.
Okay. Now, Amit, I'll start off with what is arguably maybe the smaller part first, if you will, but also something that you had cited the last quarter. By the way, thanks for saying this, that maybe you were a bit more cautious because of the Red Sea crisis, and you're changing that tone a little bit. But you had mentioned at that point of time that the global business is looking slightly worrying. You've turned the year, if I'm not wrong, with a performance on the global side, which is very strong, right? FY24 consolidated overseas EBITDA is about 50 odd crores versus a loss. So what's changed there, and do you believe you can carry forward this optimism into FY25?
Oh, absolutely. And FY25, we will have a very significant growth overseas, both on top line and much more so on EBITDA and bottom line, PBT included. Just to correct what I said on the optimism side, it's not just us, it's even our customers who are being a little more optimistic, but we have won a lot of new business, we have gained market share, and we have got new business from our existing customers as well, and broken into a few new customers. So we see tremendous new growth opportunities, and having JS Auto and ISML in our fold is allowing us to offer tremendous new products to our customers and satisfy them even more. So that's another very satisfying feature for both our customers and for ourselves.
Hi Amit, Tamanna here, and I was just looking at some of the statements you made as well, and what really caught my eyes when you talk about what changed from previous quarter's view. You say maybe you were a little too cautious, but on the other side, You also say there was a tremendous order flow from business moving to India from China and Europe. And
Yes.
I found that very interesting. Can you elaborate on that? Because is that a trend which is still on? We talked last time about the China plus one kind of a piece moving forward for Bharat Forge. Is that fructifying? Can you give us a sense there?
Yeah, clearly the China plus one is only just starting, Tamanna, for India. I think the next 3 to 5 years will see tremendous opportunities. But these are opportunities that will be encashed by companies which have significant technology, ability to deliver with capex, with differentiated technology platforms, and with ability to move from components into sub-assemblies and products as well.
Okay.
Because there's going to be a migration of manufacturing from Europe into India, and European customers migrating their sourcing from China into places like India, because India is offering three things. They're offering a conducive environment, they're offering growth, and they're offering a cost competitive manufacturing location.
I'm just wondering, when you're saying that the China plus one has just begun, right now there is talk of a Chinese resurgence, a Chinese economic resurgence. Does that skew that view at all? Or is that a sort of a challenge or a headwind to that view?
No, not at all. See, a Chinese resurgence is good for Chinese companies because then it doesn't make them so reliant on exports. But it's very clear that the US and Europe have made a conscious decision that they have to have a balanced sourcing between China and the rest of the world. And in fact, the US is moving away from China as far as sourcing is concerned, very consciously.
Just wanted to get a sense of the defense piece for Bharat Forge. You had earlier said that revenue will be about 2,500 crores in the next couple of years. Do you see that on track? Do you see things picking up post-elections?
So we are, I'm convinced we are on track for that. In fact, our reliance on only India for the defense business is now reducing because we're having an opportunity to be a global company. We're pursuing that very aggressively. And I think that our products, we have a wide variety of products which will serve many different customers. And because we own all the technology ourselves, we can configure products which can be unique to each market and make them competitive. So I think that's a big advantage, and that's one of the big advantages that our customers globally see, that here's someone who has the engineering and the manufacturing capability, including the entire value chain under one umbrella, right from steel to all the forge components, the mechatronics, the embedded systems, controls, assembly capability, and at large scale with high volume, fully vertically integrated, so that gives them a speedy recovery, speedy service, and the flexibility to get products customized as well.
Just wondering on this, you've recorded a 4x jump in FY24 or FY23 at 1600, and your order book, your new orders are clearly 5,000 crores, order book is nearly 6,000 crores. Does large part of it get executed in FY25? I'm just trying to understand.
No, this is over a 3-year period, 3 to 4 year period.
Okay.
But Niraj, we will continue to book orders.
Precisely. So I'm trying to understand from a 4x jump on a low base of FY23, what happens in FY25-26? Not a guidance, but just a color, if you will.
Clearly significant growth.
Significant growth in defense. Okay.
Very significant.
Okay, the other aspect is forging. A lot of industry reports seem to suggest that if any cycle shortcomings in the trucking business, Europe and US, will be short-lived if it is there right now, and the pickup will be swift. Would love to understand how you think about it.
So I would. So clearly in India, we are at peak levels. And this is an election year, but I think next year again we will see growth simply because India's infrastructure development is ahead of us. It's not behind us, right? Every day we're opening up highways, bridges, airports, but that's in a small part of our country. This whole country has to see the same thing happening. Secondly, large part of the US has to rebuild its infrastructure because it's falling apart. Whether they are bridges, roads, airports. I mean, literally, you can go to New York now and you can see both JFK is under a major overhaul, and I think LaGuardia has been completely refurbished to become world class. So clearly the ability to do it is there, and the experience of having done it is there, and this is something that is going to happen, and that's going to cause huge demand for trucking and for construction and construction equipment. So both are sectors where we are big players, and both are sectors where India is a big player and the US is a big player, and both these geographies are going to see tremendous growth.
Yeah, you're right. I mean, flying out of JFK, you can see the taxi drivers proudly saying that, hey, the new terminal is coming. So I agree with you on that. Okay,
but just conversely, if you go to Europe, the condition of the infrastructure there is not as good as it is what it should be.
Yes.
So clearly there's going to be an infrastructure spend there as well. Maybe not right away because of the overall financial conditions, but soon. In a few years.
Yeah. Point well taken. Just one more question is on industrials. Sharp jump in FY24. Yes, defense could be contributing, but your note suggests that capex, green shoots in private capex at sugar, cement, etc. will all aid this. Post-elections, maybe the capex picks up as well. Maybe private becomes more meaningful. What kind of growth aspirations here?
So there are 2-3 sectors where we see almost 2 to 5x growth. I'm not going to name the sectors because they're very strategic for us. But here we see, orders which used to be 15-20 crores a year now heading towards 100 crores a year. And very, very high technology sectors, very critical sectors, and very profitable sectors. And so sectors that are very difficult to break into, where we have been supplying for 15, 20, 25 years, but these are now maturing and becoming larger sectors. And we are also moving from components into solutions for these sectors. So that is what is giving us a lot more headroom for growth as well.
Got it. Great. Well, we can go on, but this is just exceptional, Amit. All the best for a very good FY25, and both Tamanna and me look forward to talking to you at the end of Q1, if not earlier.
Thank you so much, Niraj. Thank you, Tamanna.
The pleasure is ours.
Fantastic numbers there, and what a turnaround story. If you recall, Niraj, last quarter when we were talking about Bharat Forge, what was being appreciated was their candor. That they were very honest about it. They weren't trying to sort of, window dress what the issue is. So it's better to under-promise and over-deliver. Always, and that's what they seem to have done. Jai Bala, Vijay Chopra with us. You've already given your take on Bharat Forge, but I want to come to you actually on the PSU pack, because that's the next leg of our special coverage as well. And in the PSU pack, let's start with an HPCL, BPCL. Now, some news over there that there is going to be a meeting tomorrow. A bonus share will be announced, and maybe that's why you're seeing an HPCL, BPCL doing so well today. Vijay Chopra, let me start with you. Do you think there are fundamental reasons right now to get into both these counters?
Well, I think these are completely undervalued companies, and to my mind, BPCL should trade at 1,000 rupees, and HPCL again maybe 800, 900. So both these companies are good for the medium term to long term, and I reckon that these the charts are also looking very good. So definitely a case wherein you can make a fresh entry as well. BPCL as of now I think can reach 700. And HPCL as well. Though both of the companies, look like they are on an uptrend.
All right. Mihika is also joining us for more details on that meeting, which will take place tomorrow, May 9th. Is when we will know exactly what the bonus issue is. Mika, do we have all the details now itself?
Yes, we do. So they're going to consider and approve a bonus share issue tomorrow on May 9th. Now, just for viewers, the bonus issue is an offer of free additional shares to the existing shareholders. For example, a 1:2 bonus issue gives a shareholder with one existing share additional 2 shares free of cost. Now, if approved, the issue would be Bharat Petroleum's 5th bonus issue, The last bonus issue was back in July 2017, which was done in the ratio 1:2. Prior to that, it issued a bonus issue in the ratio 1:1 on 3 occasions, which was July 2016, July 2012, and back in December 2000. And for HPCL, this would be its third time of a bonus issue. The prior one was also done in July 2017 in the ratio 1:2. And prior to that, HPL issued a bonus share in the ratio 2:1 in September 2016. So when considered and approved, this would be for both these oil marketing companies their first bonus issue after a 7 years gap.
Thank you for that, Mika. Now, while we're talking about the PSU pack, it's interesting, Niraj, to note what's happening with the Nifty CPSE, and you pointed out this in the start of this show. I just wanted to set it in context of what has happened today as a bit of a tutu meme actually between the opposition and the finance minister, where she's talked about the performance of PSU stocks, and that's what's interesting, isn't it? Because the fact is, over the last 10 years, the outlook to PSU stocks has gone from companies that are not very well run and often are the piggy bank and ATM for the government to ones which are seen as very well priced.
ATM for investors.
Yeah.
In some sense, right? But I think, Tamanna, stark example of that is the performance of the PSU banks since COVID lows till now versus private banks. But I mean, she's not even spoken about PSU banks, I believe, but a clutch of other things that she's spoken about.
Yeah, so she's, so we're running some of those quotes that she put out on X. This was a long tweet thread. What struck me was what the finance ministers talked about valuations, and if we could just move to that. So these are reasons that they've given about why, things have changed, whether it's greater alignment of the management, the disinvestment strategy, etc. But what is very interesting to see is how the Nifty CPSE has moved and how some of these key indices have moved over the last several years, and which is why you've seen these interest in these stocks. I mean, Niraj, you will recall how this is something that investors did not want to touch. Now the whole conversation has gone from what is the need to disinvest. I mean, no one's really waiting for their disinvestment, and more so looking at value unlocking.
Yeah, so some of the numbers that Tamanna was speaking about and the valuations and the numbers, so they've of course highlighted how, for example, the total gross revenue of operations of CPSEs is at 37.9 versus 20 lakh crores in FY40. It's a long period, but that's an increase of 84% over 10 years. It may not be impressive, but considering there are PSUs, that is one. And then some of these other figures, Tamanna.
Yeah, absolutely. So this is what I was waiting for. So the market cap of 81 listed PSUs, remember these are numbers that the finance minister has put out, so we're attributing it to her, has gone up 225%. Returns by Nifty CPSE has gone up 79%. Returns by Nifty 500 is 27%. So we're comparing that here. Returns by Nifty 50 is 22%. The market cap of 12 listed public sector banks, the PSBs, have actually been, I would say, the golden goose. Over 195%. I mean, look at the value PNB and SBI has come up with. For the longest time, Niraj, the conversation about how these are better bets than even your largest private banks.
Yes, and now you can say that for the longest time simply because it's not just a 6-month or a 12-month phenomenon. Now it's been 4 consecutive years and more, wherein these guys have really performed well. So no surprise. But yeah, it's interesting. I mean, and of course, then some points on the paid up capital, etc. I mean, frankly, 84%, 87% over 10 years, like I said, not necessarily the strongest number, but considering what PSUs typically have done over any other 10-year period, I may be wrong here, but I don't think I am, that these are very impressive numbers.
Yeah, so just one last plate about what has been said today, that during NDA years, that's 1999 to 2004, of course, couching this that this is a political conversation which is happening, but just looking at what it has meant in terms of value for investors. And during those years, the PSUs have gone up about 300%, outperforming the Sensex is 70% gains during 2004 to 2009. So she, compares it to the Manmohan Singh years. You have a growth of over 60%, which is half the growth of the Sensex. And during 2019 to 2014, You have 2009 to 14, that's UPA 2, PSUs were down 6%, while benchmark surged 73%. So this is sort of the comparison when you put it towards the Modi years. Now, having said that, we should actually pull up what's happening with the CPSE right now before we go to our experts on their take. Vijay is also with us. And that's really interesting, because even at a time when there's a lot of, buzz around the elections, what the results will be. Remember, we're just 3 phases down. You've had a good run in the Nifty CPSE. Just in the last 12 months, you have a 50% uptake, Niraj. So now the question becomes that some of these companies with very low float, how much more steam do they have?
Well, the order books are full and brimming. If execution works out, then why not? It's been stellar performance for some of these over the last few months, for sure. Yeah, we should go to Vijay Chopra and just get his view on this. I'll come to Jay Bala as well on the technical side of it. But Vijay, even as we're talking about the CPSE index and some of these companies here, any of these that you think still have more steam left, which are the categories that you would still bet on?
So first and foremost, these companies have had a great run up. The reason was that there was a huge valuation gap. Look at a company like BHEL or the SAIL or an NMDC or a GMDC. So the list is endless. And definitely there has been some kind of a value unlocking, but still I think that there is a lot of steam left. These companies have gone up. Some of them have gone up vertically up. We've seen a fantastic up move in the railway stocks, in the defense stock. But if you ask me where my, the order of preference is, I would first say that in a correction, again, I'm saying in a correction by defense, in a correction, followed by railways and then power. So I think that, these companies which are in the defense, railways and power space look very good with the longer term perspective. Then, of course, private sector banks. So there are, smaller banks like Union Bank, etc., which are doing very well even now, and I think that there is a lot of value unlocking which is in store. Look at a PNB. Why PNB should not be at 500? So if at all they are able to take hold of their asset quality, and yes, definitely the older NPAs they've been resolving through the IBC. I think that there's a huge case wherein the public sector companies, public sector units should do well with the next 5 to 10 year perspective. Look at the defense companies. Their order book has swelled to a level where it is more than their MCAP. So I think that there are, tons of companies which are available even here at a discount. So look at a Cochin Shipyard or a Mazdok. So again, I'm saying, buy in a correction. The stocks have moved up quite well. But again, I would wait for a correction to get into these companies again. And of course, the likes of NMDC, SAIL, BHEL, NTPC.
Okay, but buying a correction is Vijay Chopra's views with just 2.5 minutes left. So Vijay, thanks for that view. But Jay, come to you as well. Closing thoughts, anything on defense, of course, and one closing strategy, if you can.
Yeah, see, on Nifty PSE index, it's coming to a significant top. If it were to close below 92.75, that will be a trend change. And within PSU names, I like REC and PFC, but exactly like Vijay said, they need a sharp medium-term correction. They've gone vertically up. That's not healthy. But then the medium term, they have higher highs to come through. As for closing strategy, I have Escorts. I like Escorts. It's got higher high to come through. I don't think it's going to drop below 34.95 before it makes higher highs. So a stop, just even 35.10 would be a conservative stop. I expect it to cross 3,600 in a day or two.
Okay. Well, Jay Bala, Vijay Chopra, gentlemen, thanks so much for joining in today and giving us your thoughts. Really appreciate your time this afternoon. A couple of conversations in between, but I think we got the key ideas that we wanted. But the market's about to shut shop. Let's quickly wrap up. Bring up the Nifty in the green, by the way, which is not bad. Because just about. But for the better part of the day in the red.
That's true.
That's not a bad outcome for sure. Banks have come off from the lows a little bit, just about 0.46 versus 0.6. Bring up the Nifty 50 heat map and show you what's moved. I don't think too much would have changed. Maybe some of the banks would have gone off the list of the top losers. No, HDFC Bank still there. But I think, no, not really. Banks are not in the top 10 list as well. But some of the losers might have reduce the losses. Otherwise, it seems to be an auto day with Tata Motors and Hero MotoCorp post results. Though Hero is also off the highs of the day. But look at the PSU presence there. BPCL, Power Grid, Coal India, NTPC. And Hindalco is up 2% because of the Novelis IPO news that they've spoken about. On the losing side, Tamanna, just the same set of names. But Grasim and Ultratech, interestingly, are amongst the top 2 losers today.
I'm also looking at the pullback, which you've seen in an HUL after doing very well through last couple of days. And yesterday's trade also, it was the top gainer. Now in that bottom list, even IT is sort of middling. HCL Tech, they're down 1.5%. But on the broader end of the spectrum, let's look at how the mid-cap and the small-cap indices are shutting shop. Nifty mid-cap not bad at all, up about 1%. The small-cap also up about 0.5%. I want to pull up your advanced decline ratios just before you get to your top gainers and losers to see what kind of a day it has been. And the reason why you perhaps will end up seeing, if we're lucky, the Nifty in the green, maybe is because of this gap narrowing. The advances have overtaken the declines, at least towards the end, pushed in part by a good set of numbers from Bharat Forge, Hero Moto. Some of them have really pushed the market up towards the end. Let's just pull up your top gainers and top losers in the BSE 500, and I reckon you will see Bharat Forge there. Star of this afternoon, no doubt about it. 15% up, nearly 16% up on close. Balaji Ameen's also, again, good numbers, up about 11%. That seems to be the story there largely. On the other hand, Sonata soft down because of numbers. Rainbow Children having a strange move last couple of days. Gujarat Flora also not great on the numbers. 197 has been having a tough time last few sessions. Voltas because of numbers, Pidilite because of numbers, JSW because of numbers. So unless there is a very clear theme, it's all about what your corporate results are and how the market is judging you on them, isn't it?
And also, as it should be, simply because this is the most important part for some of these. Interestingly, JSW Energy started off really well and then came off. The commentary was okay, I thought, but nevertheless, you'll hear from the management tomorrow at 9:40 on our channel as well. But well, that's the long and short of the market wrap. Hope you enjoyed the show with the conversations that we had with Nielsen as well as Bharat Forge and our experts. But for now, from Tamanna and me and the team that put this show together, thanks so much for watching.